The US financial system is facing another crisis. 40-year-old Silicon Valley Bank collapsed in less than 72 hours. Not one, not two, but three financial institutions have failed in the US in less than a week. After the closure of Silicon Valley Bank and Silvergate Capital Corporation, regulators shut down the New York-based Signature Bank as well. Of the three, the biggest was the Silicon Valley Bank. And this has raised concerns on whether this could be the beginning of a repeat of the 2008 US financial crisis. Experts, however, so far are dismissing such concerns as a hogwash. But what is the Silicon Valley Bank and why is it the favorite bank of startups? Well, rated as the 16th largest bank in the United States until the crash, Silicon Valley Bank is a regional bank in the United States headquartered in Santa Clara, California. The bank itself claims to bank for nearly half of all of US venture-backed startups as of 2021. The bank became a hero among the startup founders by lending money even when no other bank did. The bank also has deposits from several cryptocurrency firms. It provides banking services to over 2,500 venture capital firms, including Lightspeed, Bain Capital, and Insight Partners. So what really went wrong? Well, things started going downhill when it invested heavily in the long-dated US government bonds, including those backed by the mortgages. But bonds have an inverse relationship with the interest rates. When the rates rise, the bond prices fall. So when the Federal Reserve started to hike the rates rapidly to combat inflation, Silicon Valley Bank's bond portfolio started to lose significant value. At the same time, startup funding also started to dry up, putting more pressure on many as the bank's clients who then began to withdraw their own money. To pay these requests, Silicon Valley Bank was forced to sell some of its investments at a loss of nearly $2 billion. The bank announced last week that it had to raise $2.25 billion through a share sale to shore up its finances. What followed was huge withdrawal requests from the depositors of Silicon Valley Bank. The bank was unable to meet such a high demand for withdrawal at such a short notice. And therefore, on March 9 alone, the customers tried to withdraw $42 billion from the bank. Now, this was equal to a quarter of the bank's total deposits. The Silicon Valley Bank's collapse is a clear textbook case of asset-liability mismatch, where the lenders use the short-term hot money to lock in money in the long term. With depositors fast pulling out the money of the bank, it was then trapped with several loss-making bonds and a few liquid papers. The question now is, will the depositors get their money back? Well, the Joe Biden administration has already announced that the taxpayers would bear no losses associated with the resolution of the Silicon Valley Bank and has assured that the depositors will get access to all of their money. With the US Fed also assuring all the depositors to getting their money back, and also therefore a contagion has hopefully been averted for now. However, the startup world, which is dependent on the Silicon Valley Bank, might still face difficulties. Also, around 1 lakh jobs are expected to be impacted due to this collapse, that is worldwide. Will it have a second-order impact on India is the big question. Well, the Silicon Valley Bank, through its parent entity, holds investments in Bluestone, Carvale, in InMobi, also in loyalty rewards. Therefore, a direct impact on the Indian startup world or the new economy cannot be ruled out. Also, a company named Y Combinator, one of the key clients of SVB, has really in turn invested in over 19 startups in India, and therefore one cannot rule out a second-order impact. The funding winter, which already has been catching up in the startup space, may now intensify, is the fear that many experts have. However, the Finance Ministry in India and several other experts, also including economists, have said that the crisis may actually leave the Indian financial system unscathed. Global brokerage firm Macquarie also has retained its bullish outlook for the Indian lenders, the banking space, expecting a Goldilocks scenario for the next 2 years due to the strong asset quality that the Indian lenders have. It believes that the Indian banks are distinguished with hardly any exposure directly or indirectly to the Silicon Valley Bank. However, it's the Indian stock markets that have witnessed sharp fall, with the Sensex losing over 2,100 points in the 3 sessions that followed the crisis. In the last 3 trading sessions alone, investors have been looking at a loss of over 7.5 lakh crore rupees. The crash in the Indian stock markets is definitely in tandem with the global markets. The collapse of the Silicon Valley Bank has been swift and brutal and has left much of the world wondering what would come next.
For more informative videos like this, keep watching India Today Newsmo.